The Federal Reserve just started to print trillions of dollars and the repo market is trillions per day. XRP is positioned to be that liquidity and settlement layer for the repo market. Let me show you some information that I found. You are not going to want to miss this. Here is Chad Steingraber says, ready for QE. The federal government just pumped $5.2 billion into the US banking system through overnight repos. Now, if you don't know what a repo is, let me show you. Basic idea here is a repurchase agreement repo, right? One party sells the securities, often treasuries, to another, simultaneously agrees to buy them back later, frequently the next day at a higher price. Economically, that price difference is interest on the secured loan, with the security serving as collateral to protect the cash lender against default. Who uses it? Large financial institutions that hold a lot of securities. Banks, broker dealers, hedge funds use the repo market to borrow cash cheaply against those holdings. Cash-rich institutions such as money market funds use repos to earn low-risk returns because they are lending against high-quality collateral like government bonds. Why it matters: the repo market moves trillions of dollars of collateral and cash and primary funding source for the modern market-based banking system. Central banks, including the Federal Reserve, also use the repo and reverse repo operations as core tools to add and drain reserves from the banking system. Now, let me show you how XRP fits into all of this. XRP in the repo market could be used for both settlement and rail for liquidity and bridge asset, but in practice, those rules would likely be separated across different layers of the stack. Now, how this would work: quick repo, what a repo is, we talked about that already. But today, collateral and cash move across custodians, clearing banks, and systems like the FICC and BNY Mellon's tri-party platform. Who is a partner with BNY Mellon, the largest custodian in the world, $53.5 trillion. Well, that is Ripple, XRP, and RLUSD, of course. Tokenizing collateral and cash. Step one is an XRP-enabled repo world is tokenization. Treasuries, agency, MBS, or high-grade collateral are tokenized on the XRP ledger or an XRPL connected app chain. Think HQLA, Onyx, DTCC style collateral networks, but built to interoperate with XRP rails. Cash legs, USD, Great British Pound, Euro appear as compliant fiat tokens or regulated stablecoins. The example here is tokenized money market funds, RLUSD style instruments. We are seeing RLUSD launching in all times of different countries and continents. We're going to get an RL Yen launched in Japan probably next year. We're getting an RL Great British Pound. We're getting an RL Real down in Brazil, RL Euro. It is all going to be on the XRP ledger. That can sit on the XRP ledger or sidechains. Here we go. At this point, the repo objects are no longer. Tokenized collateral is in custody, smart contract, or escrow. Tokenized cash balances controlled by the cash lender or the borrower. Now, using XRP for settlement. Now imagine a standard overnight repo between a dealer A and a money market fund B. They agree to terms, the size, the collateral, haircut, rate, maturity on a DLT native repo platform integrated with the XRP ledger. At T+0 or T0, the platform triggers an atomic swap. B's tokenized cash is delivered to A's, and A's tokenized collateral moves into a smart contract escrow that enforces the repo terms. Where XRP comes in for settlement: if A and B are in a different currency or on different ledgers, the cash leg can route through the XRP ledger as a bridge asset. That is the new system, ladies and gentlemen. Like today's on-demand liquidity, but pointed at repo cash legs instead of retail remittances. Flow, cash token, the XRP on an exchange or money market. XRP transferred in seconds. Target currency, cash token, all orchestrated by the repo platforms, so the repo settles atomically. In this role, XRP is the settlement bridge, abstracting and fragmented rails so that repo can close in real time, even across borders and currencies. What is the biggest and best bridge asset on the planet right now with the most liquidity? That is the XRP ledger. What asset? XRP is approved in all of these countries and all of these different financial zones. Let's get it. You know it. Using XRP as liquidity and collateral. Separate from bridging, XRP can also source repo liquidity and, in certain frameworks, even eligible collateral. Liquidity: a dealer or central bank facility can hold XRP and instantly convert it into whatever cash token is needed to fund repos instead of parking the value in a multiple pre-funded Nostro tri-party pools. Collateral: if regulators and CCPs whitelist XRP as an eligible high liquidity collateral for specific segments, either tokenized securities, finance, or intraday liquidity, borrowers could pledge XRP itself into a collateral contract similar to how venues already accept digital assets in collateral pools. Practically, early phases would likely see XRP's preliminary as a bridge between tokenized cash rails and tokenized treasuries and money market fund tokens as the dominant repo collateral, with XRP only gradually used as a niche or supplement collateral when rules allow. And of course, end-to-end step through the full life cycle: pre-trade setup, custodians, tokenized treasuries in collateral tokens, XRP connected network, banks and fund hold balances in tokenized US dollars and other fiat, and had connectivity to XRP liquidity venues, centralized exchanges, institutional AMMs, or prime brokerages, Ripple Prime. And then trade agreement, we talked about that: dealer A, dealer B. The contract encodes haircut, rate, eligibility, collateral, initial leg, the transfer, intraday, ongoing. If collateral value moves, the smart contract can trigger margin calls or partial substitutions. Again, XRP as a bridge to source or return cash collateral across currencies and networks. And of course, the maturity leg: as maturity, the platform calculates the repurchase price and orchestrates the reverse flows. Dealer A returns US dollar tokens topped up via XRP. Funding comes from another rail. The funding B receives back from collateral tokens as escrow. And of course, balance sheet: because collateral and cash are tokenized and mobile, participants can rehypothecate or repledge collateral more efficiently with regulatory constraints, boosting collateral velocity. XRP as a highly liquid bridge asset sitting outside any one jurisdiction's banking system offers a neutral pool of liquidity that can be tapped for intraday repo funding and FX without pre-funding multiple siloed accounts. And of course, the settlement rail and the liquidity rail, we did talk about that a lot. I just want to show you here, the repo market is absolutely massive. The US repo market alone averages $12 to $13 trillion in daily outstanding exposures. Imagine XRP clearing $12 to $13 trillion a day, or a portion of it. 1 trillion, 2 trillion, 3 trillion, right? Let's go. Let's keep adding. The US repo market size: the US Office of Financial Research estimates the US repo market averaged about $12.6 trillion in daily exposure in 2025, quarter 3, 2025. A recent Federal Reserve paper similarly describes the $12 trillion US repo market, so you can count on that. The International Capital Market Association estimates the global repo market over 15 trillion euros outstanding, with a turnover around 3 trillion euros per day. Wow, that is a lot of money. Now listen closely. This is Casey. I can't remember the first name. I do apologize. Listen to her talking about post-trade settlement via Hidden Road.
We'll use RLUSD as collateral. Then that's essentially enabling the bridging of the digital asset space to TradFi, which is extremely exciting. Also, the XRP ledger will be used as a post-trade for all of Hidden Road's prime brokerage services. We also see that this captive audience of 300 institutional customers is, a really interesting portfolio of customers that will and do need digital asset infrastructure, which these customers will be able to take advantage of our payment and custody solutions as well.
Casey Croddick is her name. Got it. And then, of course, we did see Ripple make this announcement months back in September. Ripple is partnering with DBS Bank and Franklin Templeton to establish repo markets powered by tokenized collateral and stablecoins. That is the infrastructure. There it is, right? And then here is the photo of DBS, Franklin Templeton, and Ripple coming together to say we are building the future of the financial system. Investors can earn yield by acquiring Franklin Templeton's SBenji tokens on DBS Digital Exchange and RLUSD. DBS will explore enabling SHBenji tokens to be used as collateral to obtain credit from the bank and third-party platforms. DBS and Franklin Templeton and Ripple are partnering to provide accredited and institutional investors with innovative trading and lending solutions powered by tokenized money market funds on the XRP ledger via stablecoins. Boom. And then those who hate Ripple and XRP, are you really seeing what's happening? The US repo market isn't 6 trillion like they told us, it's 12 trillion, double the estimate. That's the real liquidity backbone of the global financial system, and Ripple just positioned itself to tap into it directly with its acquisition of G Treasury and partnership with prime broker Hidden Road, now Ripple Prime. Ripple isn't just doing cross-border payments anymore, it's unlocking idle capital across the most powerful capital markets on earth. You think this is just another crypto project? This is the foundation of the modern monetary plumbing, now paired 24/7, 365 real-time settlement with a decentralized ledger. Wall Street's deepest liquidity pipes are getting new valves, and it says XRP on them. Don't just watch the price, watch the positioning, because when the switch flips, it won't be about hype. It will be about who controls the rails. Let's go. And of course, more big news. Ripple just flipped on the switch. It's something ginormous. RLUSD, of course, is going multi-chain across different ecosystems. Ripple's regulated digital dollar is moving beyond the XRP ledger onto L2s like Optimism and Base. That's one of the single trusted stablecoin live on multiple chains without a bunch of sketchy wrapped copies. XRP equals liquidity engine. At the same time, Hex, Trust, and partners are rolling out wrapped XRP, so native XRP can show up on Solana and other chains. You have Ripple expanding across the entire ecosystem, interconnecting everything. You're going to see XRP and RLUSD on some of the biggest chains in the world in the days to come. Now let's put these two things together, RLUSD and L2s as the stable regulated money, XRP and WXRP as the bridge asset and liquidity between XRPL and Solana and the EVM sidechains. One architecture tying banks, stablecoins, and DeFi into the same flow. Can I get a like on the video for connecting all of this for you, please? You're no longer holding a coin stuck on one ledger. You're holding liquidity key that pairs with RLUSD across multiple chains, power swaps, payments, and DeFi routes in different ecosystems, sits in the middle of value, the value that moves between banks, L2s, and Solana and Ethereum. Price can lag, narrative can lag, but every time RLUSD and wrapped XRP lands on a new chain, XRP's utility map gets bigger, and utility equals value. And here is the chains: Optimism, Base, Inc., which is Kraken's layer 2, and Unichain. Woo! Now, this is important. We did cover this in 2 videos already today. Ripple is extending its regulated dollar stablecoin across all of these networks. And I told you why it's important. And of course, looking at the ETF volume today, $21.3 million. This video should come out on Tuesday. This was Monday's volume. Just want to make that clear. $51 million in leverage volume. Total is $72.3 million today. And here are some of the biggest volumes that we saw: XRPC, Canary Capital, XRP, and of course, XRP. This is Bitwise. This is Franklin Templeton, and of course, Canary Capital getting the #1 spot, but not by much here. Look, 5.84 to 5.76 to 5.73. They are all very close, which means institutional buyers are still showing up every day to gobble up even more XRP. We've had 30 straight days of inflows into XRP. What will the next 30, 60, 90 days look like? Is more XRP going to be taken out of circulation? I truly think it will be. At some point, we are going to scratch and claw through all of that OTC volume. Once that is depleted, the only place you're going to be able to get XRP is from Ripple or the open exchanges. When the open exchanges run out, Ripple becomes the lender of last resort, the new IMF and World Order Bank. Listen, this is getting really interesting. Day by day, clip by clip, video by video. You have the roadmap for your financial future. This is everything. This is everything. It doesn't get bigger than this. XRP is connected to the biggest systems that the world has. It's connected to the biggest regulators, the biggest financial institutions, the biggest companies. It's all coming together in 2026. I'm excited. All right. Happy holidays. Enjoy. I'll see you next time. Aloha.